Hi, everyone. Welcome to the Aiscend AI podcast where real estate meets AI. I'm your host, Hannah Taylor, and today I'm sitting down with Randy Holland, the founder of Urban Equities, a multifamily investor and syndicator who's been in the game since 2018. Randy started with smaller, high-performing deals and quickly scaled into large multifamily projects across major growth markets. But like many operators who thrived through the boom years, the rising interest rate environment has forced him to rethink strategy, communication, and efficiency. Today, we are diving into what it really takes to manage investor relations, capital calls, and deal flow when the market shifts, and how technology and automation might play a role in helping sponsors like Randy adapt faster, communicate better, and free up time for what truly matters, relationships and growth. Randy, I'm so glad to have you here. Thank you so much for joining me.
My pleasure, Taylor. And by the way, you just covered everything that we could talk for days on. And it's clearly what we're doing, man. It's communicating and trying to figure out, automation strategies and agent strategies, AI agent strategies, and looking forward to talking.
Yeah, me too. And I'm so glad that the intro hit a lot of the spots.
Covered it all, man.
Great. Well, and I'm a good listener and a good prepper. So Randy, why don't you just walk me through right now what your business looks like and what are some of the challenges that you're being faced with?
Okay, so we formed in 2018 as a syndication asset management firm, just capital management from high net worth individuals, right? So when you're young and a syndicator, you run out of friends and family money really fast, right? I mean, so you can do a few deals, and then suddenly you're looking for capital if you want to keep doing deals. And so we joined forces with another a firm that has done a really good job of aggregating LPs and GPs. And Brad Sumrock is the universe that I'm talking about. They're out of Dallas, and they've raised up a great many, not only LPs but guys that have sort of graduated to the degree where they're syndicating deals themselves as GPs. And we joined them in 2020, about 10 minutes before COVID. So I guess technically it was still 2019, but what that caused us to do was rather than going, we were terrified of becoming a GP during this lockdown, right? And so we took the year to just do LPs. We did 11 passive investments with other syndicators. Learned a lot just by being in the room during the property meetings and the communication style that these different sponsors have. And there's a wide range of communication styles, as you can imagine. And you kind of figure out what works and what doesn't, at least for me as an LP, and what I would want to carry forward as a GP, and tried to do that. And I think that year was really helpful for us because we'd done GP deals here in Nashville on smaller things. Like I said, you ran out of friends and family money fast, but they were small, and we were able to turn them around fast. But when you get to a deal where you're raising 6 million or 10 million, or our biggest one was 20, in the past few years, you need help. So we generally, sort of the model is to kind of find one or two different GPs that you think you can get along with. And of course, the better you know them, the more you're sure. And you'll always find GPs that partnerships in the GT environment where it just didn't go the way you hoped it would. Mm-hmm. And yet you still have to get through the deal.
Yeah.
And so there's a tremendous amount of knowledge that one needs to sort of acquire to find a way to stay together and to work together. And you're going to find that in those situations where you disagree a lot, it's a challenge, man. It is a challenge. And this has been a moment when we've been able to see, because things got so frothy, rates, they climbed to 2,100%. And you get to see how people react when they're confronted with a bit of doom. And you find that not everybody reacts the same way. And there's no way you can know that until you kind of walk through something like that before, or heard somebody else's report on an individual. So as hard as this period has been for us, it's been so important to get through, because especially that we're still standing and feeling like we're kind of through the smile and we're going to be starting to rise again. but boy, we learned so much about lenders, about other partners, about investors, and who do you want to be as an investor, and who maybe you don't want to have as an investor. I'm just carrying on here, but I don't know that I've actually answered your question. We started in 2018 and did a few little deals, and now what we're trying to do, and we've done it pretty well. There are, out of the four deals that I'm actively sponsoring right now, three of them are in the process of capital calls. So
Okay.
that'll help you.
Yeah. So,
It's a heavy lift, and so we're spending a lot of time with investor communications, underwriting and talking with lenders about what we can do. And all of our deals are in a loan extension ask environment. Two
mhm,
out of these three deals, we've already gotten our loan extension granted to us from our lender, and in every case, they said maybe a year ago that they weren't going to give us this 5th-year extension, right? So we get you. These bridge loans are three-year base and then plus one, right?
mhm,
But if you get to the plus one and plus one, you got to hit performance metrics. And the one performance metric that we really couldn't control was the debt service ratio. And no borrower in this one lender's portfolio had met that, because, with rates going up the way they did, there was no way to really do it. And they could literally just shut the file on any and all of us if they wanted
mhm,
to.
mhm.
And they did on many. And there comes in there's the reality of why it's important to be a really, really good sponsor from a lender's point of view. That
Right.
means, communicate, turn your reports in on time.
Mhm.
Don't be difficult.
Right.
Decide what hill you want to die on and let everything else go.
Yeah. Yeah.
That's really important.
Yeah.
So maybe you should ask me another one to point me in.
Well, it just sounds, you've got a lot of people that you're trying to appease with this deal,
Yeah,
right?
yeah,
Obviously, your investors are investing with you because they expect some sort of return. But at the
yeah,
same time, they do expect efficient, clear communication, as do your lenders, because you kind of identified, the best way to stay in a lender's good graces is to be thorough with your paperwork, be a good communicator, and really instill a level of trust. And so I do think you have a certain level of relationship building that probably goes a long way in this business. So tell me more about what you're currently doing and how you're keeping those lines of communication clear, effective, and efficient, and not clogging up your entire workflow so that you don't have time to continue to underwrite deals or acquire new opportunities.
yeah. Okay, so um, the lender relationship for me is one that I start really pretty early on with, just trying to make sure that there's a person that I can contact and chat with uh, in a warm and friendly way, right? I mean, I I want to know what's going on, I want to develop a friendship to the extent that you can. I mean, it's not important that I become his pallbearer someday, but I do want to be friendly with him and understand what he's going through. And if I can't find a guy like that, it's a challenge. But usually you can. I mean, people are human beings and they're interested in getting along with others. And to the extent that you're able to both do that and turn in your work for them on time, it
Mhm.
goes a long way, man.
Right.
It just helps, and because they don't want problems, and they're reporting to somebody, right? So it's usually that simple. And if you're trying to arm wrestle people on every call, it's just they don't want to talk to you.
Right.
They do. They dread seeing you and talking to you, and I don't want to be that guy. So do
They
my
see your
best.
phone, your name pop up on their phone, and they
Oh,
just hit
yeah,
that ignore button.
exactly. Don't you have people like that? I know I do. I mean, it's
Yep.
just, you have a choice.
It
So
happens. That's
yeah.
okay. So with the investor communications, do you have that, system pretty well in place now, where you know what you're communicating and when you're communicating so that it's not so much of a heavy lift and a heavy load? Or is that something where you're still trying to figure out how do we best keep them all informed and what's going on and stay in their good graces so when we do these capital calls, they still feel trust within us and still feel as though we're capable to be the host of their funds?
Yeah, because so that brings up the idea of the investor, because the capital call is more sort of aligned with that part of the deal. lenders, sometimes, when we got to the end of our first period, at the end of 3 years, and they said, okay, we're going to have to rebalance this loan. You're going to have to bring $3 million in, because that's just where things were. We had met our NOI, pro forma, over the 3 years, and we're actually ahead of it. But because the debt service was so heavy, they couldn't justify giving me extension unless they got some of my money back, their money back.
Of course.
And so I went up there to New York and met with them. And it's important to be both. I'm coming up. I hope you don't have a problem with that. They said, well, we're really not used to seeing borrowers in here, because this is private lenders, right? These aren't banks. They're private lenders. They're only a bank in the sense of they're giving you money. And I went up there and I said, look, I need a 3-year extension. And everybody I asked before I went said, you're not going to get it. You're not going to get it. If you get a year, you'll be lucky. And I said, well, I'm going up there to tell them what I need. And I think the market that I'm in, I know they're long on this market, and it was a Nashville deal. And I knew that they were interested in the deal in a major way. They didn't want the deal back. It's too far out of where they are. So I said, I need 3 years, 30 basis points of a rate reduction. I want to pay my extension fee in parts, a little bit every year. I want you to jailbreak all the remaining capital improvement dollars and give them to me. And instead of a rate cap purchase, I want to give you the money, and you use that, put that in the reserve, and that'll save me $10,000 just in fees and more, because they're arbitrating the value right now between the forward curve, which shows, let's say, I don't want to get too far in the weeds here, but I do want you to understand this.
No, and I just to clarify too, I do want to say, I asked this question about your communication with your investors. So I think this is all context. You might edit out a little bit of this.
Yeah.
How do you communicate with your investors about these capital calls, or just like updates on the status of the investments and such?
Okay, so first of all, I start with every month I give a update, and it includes a series of reports. Both, it's got the PM's reports, the property management company's reports, which is it's a terribly dense and long document that's a PDF, and it goes for pages and pages and pages and pages. But then what they really want is what we've determined is 4 parts, and it's just a summary. It includes a 3-month look back of our key elements, and then it shows a balance sheet, and then it shows the P&L as compared to budget, right?
Yep.
And they want that really in the body of the email. And so one of the first things we did first thing we did was with the lender version of that, which had a couple of more reports related to the rent roll. And it was taking me forever to get them done, because when you're trying to embed something in an email, you got to make it an image and stick it in there so that it flows. And these are all going up into CRM type delivery mechanisms. And so I used AI to put together an agent that builds these things for me now.
Oh, wonderful.
So I get the big thick document from the PM, and we've mapped it so that AI knows how to build, not only extract the data, but also create their report in PDF form. And all I got to do is post it as an image. And that saved me 3 hours this week.
Amazing.
And it's the first time I really got it rolling. And now I got to turn around and do the same thing with my lender docs, which is the next thing to do. But those things, you'll spend a day on it, and then you get 3 hours back once a month.
100%. And I think that there's probably so many areas of your business where you could.
Oh, there's not that. I have another one for you.
All right. I'm excited to hear it.
Since we got into this, one of the biggest problems in markets like us, we were talking about a C+ kind of environment, or to B- kind of property. There are a bunch of people who are gaming the application system. Oh my gosh.
Oh, that's terrifying.
Greystar said that 50% of their applications are fraudulent.
No.
That was in a recent podcast with Jay and Jay Parsons, and it shocked me. But as I knew, because I knew we were experiencing it, particularly at one of our properties in the Nashville market, and they're basically now doing what we call concession jumping. The, there are so many new properties in Nashville. It's one of the highest growth adds for supply in the country. It's so bad that the new construction properties are giving away 2 months free, right? When people move
Uh-huh.
in.
Yep.
Imagine that. Well, we also found out that it's taking about 120 days for the court systems that report in general sessions of a unlawful detainer, an eviction, to actually make it to the credit reporting agencies.
Oh,
So if you add that 2 months free, and let's say that they get to the end of the first month and they go, okay, well, I better start thinking about my next stop. So they'll go in early and fill out an application for the next place that's going to let them be there for the next 2 months. And then they can even do it a third time and have four 2 month periods of free rent before anybody figures out that they aren't paying their rent. So we've built an AI agent that takes the application and looks at their previous 6 months of locations where they've lived
mhm.
by address, determines the county, determines the court jurisdiction, goes into the docket and looks for anybody that's on, it looks for their name so that we can see if they've, because again, that's 8 months worth of lost information because they start early and they're doing it on purpose. And we're hopeful that it's going to make a big difference. It's just now being implemented, but those kinds of things we're going to figure out all kinds of ways.
Oh, that's an incredible solution for the problem. And the way that you leveraged AI is absolutely genius in that scenario. Because yeah, there's so much rent lost, right?
Oh my God.
Oh my
It's,
goodness. And I do, we're seeing that here in Denver too, with a lot of the multifamilies. They're giving away 2, 3 months, they're giving away $2,000 in credit card, like gift cards.
right.
And it's just like, I think to myself, how are these investors making money on these deals, right? Because they're having trouble filling the room. So no, that's a great way at least to protect your assets. So that's
Apparently there's a
definitely,
TikTok player out there that sells, fake identities that are ready to go with credit, the whole
wow.
thing, the whole nine, so that you
Yeah.
can
You just opened up a whole new realm of AI that I hadn't even considered, but just like asset protection and verification. Um,
100%.
that goes a long way in your world, I'm sure.
Yeah, yeah.
Now
So
tell me, have you,
the rest of the story about me communicating with my limiteds is with that 1 month newsletter. Let's say I've got 50 investors in a deal, which would be probably about average, and I'll probably hear from the same 10 people every single month. And it'll either be an email response with a question or they'll call me, and I love that. And then you don't hear from the other 40 people. So how do you kind of keep tabs on their temperament and what they're thinking? Because the truth of it is a person is the person people that are uninformed are angry when they learn something's gone wrong.
yes. Yeah.
And if they stay informed, they're much more likely to be ready for the information. It's like every month, just tell them the truth. If you've lost, don't paint a rosy picture that you
Mhm.
can't support
Right.
with the facts. And yet there are a lot of people out there. I have partners who you'll get into GP situations where they want this GP who brought in 12 investors doesn't want anybody to talk to these 12 investors except them. And they want to, if you can build the report, but I'm going to look at it and edit it before I send it on to my people. And because they don't want to be, and it's notoriously true that these folks don't want any of the bad news to leak all the way out to them. And it's disturbing, and it's one of those things that's difficult. I'll know how to find it in the future because I'll just freaking find out that we're not going to, you don't get to edit
Right.
who's here. Oh, your light just went out.
I know
Obi
my
just.
light. Hold on. There we go. Didn't realize that was on a timer. Sorry about that.
Well, at least you didn't pay your bill, right?
Sitting in the dark. Oh gosh.
Yeah. So we're moving forward, as you get better at picking GP partners, you learn these questions to ask and say, am I willing to live where you got a silo of people and I've got a silo of people and she's got a silo of people? And it's not conducive. Not in my world. I really like the communication piece. There are GPs that are terrified of it. And I'm happy to have them as a GP if they bring a skill to the table.
Mhm.
But I don't want that. It creates such confusion because we've had an annual meeting every year with with webinars, and the people that you don't know, you just really don't know. And
Right. Yeah.
I've got to get better at. I've got to find new solutions to talk to them. I think when we've chatted before, I've said some people you just can't get on the phone.
Right. Yeah.
And that's too bad because everybody benefits if you just
Have
talk.
conversation.
Typed messages are even difficult because how much of the humanity do you get drained from a message when there's no, I mean, voices is pretty good, but
Yeah,
boy, a video is even better because you can
absolutely.
see everything. So I just I'm thinking a lot about that and how I can
Mhm.
become a little bit more human with touches.
Yeah. And I think about that all the time in my world too.
I
As a
bet.
realtor, relationships are everything and they are key. And so there's a lot of things that I thought about implementing, like voice notes or things like that you just send off. And no response needed. I just wanted to send you a voice note. Here's what's going on. And that way it adds a little human element to it rather than just a text message with no personality. And that's something where you can record once and kind of mass send to all the investors.
True.
So
Exactly. I did that when we were raising and after we had finished the webinar, I sent out a daily message to everybody that hadn't made a commitment yet, and we got it done that way. And
yeah.
I said, "Look, this is the 11th day. How many more days do you want to see my?" And I know that most of them probably weren't. By now, they've already said, that's Randy again. Don't click it." Still, it's just a way to. And you said before that it's such a relationship business, and I think so many people miss the significance of that phraseology. It's that, yeah, it's of course it is relationship, but it is they get a chance to see you as a human
Mm,
with all of your animation and your context. And when it's just written, they don't get to see it. And so they don't know they need it or miss it,
right.
but they need it. They need it if you're going to be effective. And people want to follow the people that people choose to follow isn't necessarily the guys with all the leadership skills. It's the guys that can convey a message that they think will make them better off down the road. It's a quiet confidence, it's competence, it's warmth, it's caring, but they just want to follow somebody who knows what they're doing and they at least know they can get there.
Yeah, absolutely.
Right? Because I
Yeah.
want to follow somebody that's confident.
Yeah, absolutely. That makes a lot of sense. So we've done a really great job, I think, of talking about the current day challenges, where your business is at. But Randy, I know that there's a world where potentially rates drop a little bit, right? Or
Yeah,
there's a
yeah,
world
I think
where,
you're coming.
yeah, I hope so for you and for me. So tell me how you're preparing for that because I know time is a major constraint, right? And
Yeah.
underwriting more deals in less time is a goal. So what are you planning to do and how are you looking to address the future?
My firm is small. It's my wife and I who have been married 43 years, and our son, who's in the real estate business as well. And we all we work well together because of the amount of time we spent together. But we're finding that we had a team of seven at the end of 22. And when things got, when we started just having to buy rate caps and keep our deals together ourselves by loaning these companies money. And that's what you do, by the way, if you want to be a GP that survives, is you have to have some capacity. You have to have some liquidity beyond what maybe others have. I mean, you've got to have the ability to bail out your property if you believe in it, at
Mhm,
least in temporary ways. And so, but that also meant we had to lean up everything else.
mhm,
And and then AI has come along, and we realize we may never need more than the three of us.
mm,
It's an extraordinary situation, especially if you think about what the things we do. We're all about reporting and keeping up with, you know, um, the tax man and paying the property taxes and paying all these things that are just administrative duties. And they have to be executed and they have to be executed on time. Well, I don't need a person anymore to
Mm,
do that. I mean, I
mhm.
can build the agent that can keep that going. And so terribly excited about what this means. But more with respect to now that we're ramping up and we're starting to see the light, we're starting to see the sunrise. Well, I think we've had one. We're now in October, and we've had that September cut, quarter point. They've, Chairman Powell has just come out and said that, yeah, we're going to be in a rate reducing, environment for the next little bit at least.
Mhm.
And if we get two more quarter point reductions, whether it's 150 in December
Mhm.
um, or in October, and then another one in December, or if it takes till the spring. I believe it's that kind of a change that is going to change the number of investors who actually pile back into
Mhm.
this environment, because the 100% depreciation benefit is back. We get to
Yeah,
write off all of our investment if we have, if we'll do
huge.
yeah, what do you call that thing that we
Bonus
do?
depreciation,
It's
cost
bonus
segregation,
depreciation, and you have to use this study. What's it called?
a
Uh,
cost segregation study.
Thank you, cost
Yeah.
segregation study.
I got you.
Yeah, and those things they add jet fuel to the deal for
They really
investors.
do. Oh my gosh, yeah, if you can bonus
So so,
depreciate.
so super important. And what we're going to see is as investors come back in with these deals and rents begin to rise. Now, I know that rent softness is not 100%, ubiquitous all over the country. It's in the areas, it's in the Sun Belt cities where we got really busy building, like Nashville and
Hmm.
Raleigh and Charlotte and Atlanta and Dallas. I mean, they have really added so much supply, but it is going to be mid-year 26 when, at least in Nashville, one of the hardest hit areas, is completely balanced again. It's
Hmm.
coming really fast, faster than people thought. When you start seeing rents begin to rise again, which I believe is third quarter 26 in our market here, and you see all these investors back, cap compression will really begin. Not,
Yeah.
it's going to take a minute. It'll take a year for us to start feeling like, wow, I need to buy now because I don't want to wait a year
Hmm.
because it's going to get more expensive. We're
Yeah.
not in that moment
Right.
yet.
Right.
But once it happens, there are going to be so many people out there. So that means I've got to be underwriting all the time. So
Hmm.
my next challenge, as soon as we get through this current, we got our third and final, webinar for this extension authorization coming up tomorrow, and then I'm going to be moving right into building this AI agent for underwriting. It's really the next important project we've got, because in 60 days I want to be underwriting a lot more. I'm not underwriting. I haven't been underwriting. I've
Take a
sniffed
little
around a
break,
few deals.
stabilize, right? And that's
That's
okay.
right.
That's the ebbs and flows of business. Absolutely. Well, Randy, this has been such a wonderful conversation. I do want to just leave the guests or the listeners with a way that they can reach you and hear more. Let us know how they can reach out to you.
R. Holland at urbanequities.net.
That
Or
okay.
look, I'm okay with giving my cell number because if you don't leave me a voicemail, I won't call you back. But if you do, I will. So how's that? 615-579-9686.
Love that. Get those conversations started with
All
maybe
right.
your
All right.
investors or GPs. Thank you so much for giving us just an honest look at what it's like running these multifamily projects through, I would say, one of the toughest cycles we've seen in years. And so this has been fantastic to chat with you, and I really hope that this resonates with a lot of people. For everyone listening, thank you for tuning in. And until next time, I'm Hannah Taylor with the Aiscend AI Podcast, where real estate meets AI, where we talk about real estate leaders who are navigating through change, leading through uncertainty, and building smarter businesses. Thank you so
Thank
much.
you,